LIC this quarter has been has emerged as the highest performer as far as financial services sector is concerned. And last quarter also, Q4 last year also, you posted a record profit. So in that case, sir, how hopeful are you that investor putting in money as far as LIC scrip is concerned, because it has been trading below its listing price for many months, I would say.
If you had seen, LIC's prices had gone above the listing price also for a long period of time, but the capital markets in the country have been witnessing a very difficult time, and you have seen that ever since the West Asia crisis came, and before that we had the Russia-Ukraine war also coming up, markets have been going through a turbulent time. So the price of LIC's share has also been affected. And moreover, there have been different perceptions at different points of time, which has affected the share price of LIC so far. LIC has been focusing on showing an improved performance quarter over quarter for the last 3-4 years, and we have been very clearly focused on improving the shareholder value as well as the benefits to all the stakeholders. And our efforts have certainly resulted in our showing good performance in 2025-26 in particular, and if I can go further, the last quarter has been really good. If you notice, LIC does the valuation of its core business once in a year, and the surplus arising out of valuation gets transferred into shareholder funds only in the last quarter, and hence the last quarter results are always better than the earlier 3 quarters. So that being the case, last year's Q4 as well as 25-26 Q4 has been really good, and we hope that the shareholders, as and when they come back to the markets in a big way, if this on resolution of the current crisis or whatever it is. So we expect that the perception towards LIC share also will improve, and we expect the share to perform much better in the days to come.
So that will create, once the LIC scripts gets better, that will prepare ground for government further diluting its stake in LIC.
Yeah, the government also has been focusing on complying with the listing requirements, the LODR regulations. They expect that any company which had seen the IPO will have a public float of 10% and 15% at different schedules in time, and the government has been focusing as to how this can be achieved. The only thing is the market has not been so conducive, and so maybe the government will be looking at an opportune time for coming up with the next issue. We have done quite a good amount of activity in rewarding the shareholders in the last quarter. If you find that we have announced a 1:1 bonus and then followed up with a good dividend, which is 67% more than what was declared in the previous year. So I am sure that all these things will help the improved perception and improved valuation of LIC, and I am sure it should be possible for us to take things forward.
So as far as LIC is concerned, you are well prepared for government dilution of its stake?
We have been prepared right from day one. See, this when we started preparing for the IPO, we were to be prepared for this kind of subsequent actions as well. So the call is taken by the government. The government takes the call on the timing and the quantum or whatever it is, and as and when they come up with the decision, LIC will be fully geared up to work along with the government in ensuring that every initiative gets the right success that it deserves.
So you closed this financial year, I mean FY27, at a very high VNB, upwards of 20%. Do you think that this is sustainable going forward in FY27?
See, the effort that LIC has been taking is to see that the VNB margin or more than that the gross VNB as well as the performance of the corporation in almost all parameters keep improving. Initially, before IPO, we were a pure par business player. We are very strong in that, and we started slowly changing towards the direction of non-par growth and stakeholder value creation. Along with that, see the markets liking also keep changing. So when we took a decision to improve our performance on the non-par side, to improve our performance on channel diversification, to improve our persistency, to improve our ticket size, as well as improve our profitability, there had been consistent effort taken by the corporation over a period of time, and all of them have been yielding results. And the effort and the clear focus towards improving the share of non-par business, plus the focus on products, clear focus on the various products that we have brought in, plus improving the contribution from all channels, have helped us in improving our margins. We have reached 21.5% as you mentioned, but as you know, the VNB margin has got multiple components. Some of the components are within the what do you call, area of focus of the corporation. Some are outside our purview also. But given the set of circumstances, our focus, our efforts will be to see that the margin that we have reached, we would like to maintain or build up on that a bit more. That's what we are looking at. But ultimately, we have to be very clearly focused on the interest of the policy holders. So we should be having our products in such a way that they provide good value to the customers, and the customers keep adopting and subscribing to our products. So that will be our primary focus, and we will be trying to improve our margins by improving the ticket size, by improving the volume, and through that improving the efficiency of the corporation, and through that achieve the VNB and VNB margins.
So to achieve that target of maintaining VNB upwards of 20%, sir, obviously you would have thought about various products that would be rolled out during the current financial year. If you could throw some light on that. I believe on the individual side you are already having 36 products, and on the group side also you have sizable number of products. Are there any out of box product that you plan to bring in during this financial year to garner more and more business?
See, the focus of the corporation, or for that matter any marketing organization, should be to see that the customers' needs are met. So we have our ears firmly grounded. We get feedback from customers, from the agents, from the intermediaries who are in constant touch with the customers, who give us feedback as to what more that the market will be expecting from LIC. Our new products are designed keeping that in mind and ensuring that whatever product gaps we find, are the gaps that we find in our portfolio, whatever we need to bring in to see that our sales, our marketing performance remains attuned to the market expectations, is going to be has been the clear effort that we have been taking. So whatever products we have launched in the last few years have been very clearly aimed at meeting the gaps and meeting the expectations of the customers. So our effort towards having this ground level feedback, seeking and acting on those feedback will continue. We will be coming up with new products based purely on what the market demands, what the market wants, and where we need to fill the gaps, or we need to bring in products to match the emerging demands or emerging needs of the customers, is what we are looking at. This is applicable both to individual as well as group business. The group customers also have a few needs, and we need to be coming up with ideas or coming up with products that meets that meet the needs of the end customer. So that is what we are looking at. So incidentally, when we are launching new products, we also look at how the product can be made quite viable, adding value to the customer and also bringing value to the stakeholders. So that is how the products are being launched.
How many new products one could expect from LIC stable this year, sir?
We continuously keep working on multiple areas. We have already announced one new product for the current year, which will be available for sale from 1st of June. That is a Jeevan Saathi policy, where it covers the risk of both the spouses, and it covers a single policy. We cover the risk of 2 lives. We provide for the savings with guaranteed additions, which will be giving a good opportunity for the spouses to avail the benefit of insurance as well as build up a corpus for their future. So that we already launched. We are also working on a few more, and we'll be rolling out. We may expect maybe a launch every quarter at least.
Sir, you know, I think you have crossed the AUM size of 57 lakh crore, and given the current run rate, can investor expect that you would be crossing 60 lakh mark in FY27?
No, this current AUM is based on the present market conditions also. Had the market been bullish, the figure that you are talking, we would have crossed already also. So our focus will be to continuously increase our AUM. More than the AUM, see, we are looking at mobilizing the policyholder savings. So when we have very clear budgets, when we have very clear action plans for the years to come, and if the market also grows, I am sure our AUM should be much bigger than what you are talking about. But we are looking at currently focusing on mobilizing the people savings through life insurance products, both individual and group, and creating a fund out of that.
So you are on path to exceed 60 lakh crore AUM.
It depends on the market. See, valuation is based on mark-to-market valuations also. So the markets do well, certainly that will be easier, much earlier than that. But we are focusing on increasing our AUM, no doubt about it.
Sir, if you could also give some idea about your IT segment. Project Dive has been there, and it has made a remarkable improvement in your doing business as far as LIC is concerned, and even private sector is acknowledging that Big Daddy has certainly become agile as far as digital infra is concerned. Since you are doing it in a phased manner, what is the pipeline for Dive for FY27?
See, as you mentioned, the Project Dive, which is digital innovation and value enhancement, has been launched in 2023 with initially a consultant, a partner working on us on identifying what kind of transformation we have to bring in on the digital front. We have always been a technology front runner. Even earlier, from 1960s, we have been using computers and systems for running our business, and without that, managing such a huge volume of business would not have been possible. The last few years, what we are looking at is to improve the infrastructure, particularly the platform on which the digital front page of the corporation will be built. So while the underlying core business application remains modernized and it's a continuous effort to make it robust, we have been working on creating a platform on which the digital offerings of the corporation will be built. So we have built the platform. We are also building simultaneously a big data lake. Both of these together will support all the digital initiatives that we are contemplating. As a first phase, we have brought out new mobile applications for the customers as well as our intermediaries. The new mobile application for the customers is titled My LIC, and the application for the intermediaries has been titled Super Sale Sati. So we are building up the essential features for making the app completely operational, and to enable a customer to have his end-to-end journey from getting onboarded as a customer till the date of maturity. All the service requirements, including taking a loan if required, changing the nomination, having if you want doing an assignment of the policy, or making changes to the policy conditions as he moves along, or to get all the services registered. The mobile application will be sufficient for him to do it completely digitally. That's what we have started, and the current mobile application has got the basic features required for that. We will be continuously working on improving the various features available on the mobile application, and also include the features that will help in our customer engagement on an ongoing basis. That's what we have done. Similarly, the mobile application that we are bringing for the intermediaries will almost provide an office in his palms. So whatever he was coming to the office for, getting the services rendered to the intermediaries, now will be made available in the mobile application itself, and we'll be adding features so that the intermediary, the agent also gets inputs on 360-degree view of the customer, the various opportunities for him to do cross-selling or upselling, or to provide timely inputs to the customer in getting the policy serviced properly. So everything will be built, and so that the digital front of the corporation will be completely strengthened, and the ease of doing business will be much better than what it is current today.
Given the size and scale of your organization, sir, are you also looking at having your own data center or upgrading your data center, given the concern around concern that cloud mythos has put as far as digital vulnerability of financial sector is concerned?
See, we have been focusing on data security and information security right from the word go. We have been having these systems in our own premises earlier. Currently also we are creating cloud infrastructure of our own, not on public infrastructure, for our core business application and the various business applications that we are building. What changes we have brought in? Initially the hardware was also in our own mini data centers. Now we have centralized and taken it to co-located data centers, but the infrastructure is our own. So our business applications run on hardware infrastructure of our own, which has moved from standalone servers to cloud infrastructure, which has been created by us. And we have built a robust business continuity plan in respect of our IT infrastructure, and we are currently hosted in co-located data centers. We have enough resources or requirements of having a data center of our own, but that is not our core business. So we will continue to be using the services of professional data centers for hosting our applications. That will continue. We are not under public cloud as of now, and hence we are focusing on strengthening the cyber security posture of LIC in terms of our infrastructure.
So you consider a veteran as far as infrastructure rollout in IT infra rollout in LIC is concerned. So there was talk of LIC exploring possibility of having its own fintech arm. Have you shelved that idea?
No, it has never been shelved. In the sense, see, we are a big user of IT, and we need good IT support. This is a given. We have built our own core competence in developing our business applications by building up a software development center of our own. We have sizable number of people working in our IT department, creating the IT solutions for us. But that does not mean that we can be totally self-dependent. We engage a lot of service providers, IT service providers, for the new infrastructure that the platform that I was talking about. Also, we have good big players of the country working with us. So we need to have both. We need to have core development teams as well as the support of IT players. Naturally, for meeting the modernization requirement, and particularly in terms of bringing innovation, we are engaging both the Fintech and Insurtech players, and we are getting a lot of new things being developed by such new players. This is on the one side. On the other side, we are a big financial institution investing in multiple organizations, and we also look at strategic investments in any specialized player as a way of improving the returns on the policyholders' funds. So both go hand in hand. So we can look at engaging fintech players. We are engaging the fintech players, but whether it can be a strategic partner, we are looking at various options available, and we may be coming up with something, but we are not very particular about that as the first aim. Our first aim is to see that our IT applications get modernized and we become as agile and nimble-footed as possible to be relevant in the competitive arena today.
Are you actively looking at that particular option of having strategic?
We are looking at collaborating with many players, and certainly there can be such kind of arrangements in the future. It's not ruled out.
When you say future, can it happen in FY27?
You cannot say that, because we need to look at what's the value proposition and then take a call on them.
You're a big player as far as equity market is concerned, even in debt segment, you are a sizable player. If you could give some idea, what sort of investment that LIC plan to make as far as equity is concerned or debt and debt side in FY27.
You know that we manage multiple lines of business. Okay. We have participating business. Participating business naturally need a clear aim or focus on increasing the return to the policyholders, so that the bonus that we declare are matching the expectations of the customers. You have the non-participating business where every benefit is guaranteed. So the aim of the organization is to ensure that we invest the money in such a way that we will be able to meet our guarantees. We have unit linked products where the mandate is left to the customer to decide what kind of fund choices that he would like to avail. And we also have a substantial portfolio of annuity business, which is very long tailed, with liabilities running into 30, 40, 50 years. So the investment of funds is based on the underlying business and underlying fund. If it is par, yes, we can increase the exposure to equity. If the money is flowing more into non-par, the underlying investment of, plan should be to have more interest-bearing securities or fixed income securities on which we can build up the guarantees and make the guarantees. We also use hedging tools in terms of protecting future interest rate risk towards the guaranteed products. And we have long-term annuities where we look at long-term investments, and we look at investments in infrastructure sector as well as in fixed income securities, which can give us return over a long period of time. When it comes to ULIPs, based on what fund the customer chooses and the underlying mandate of the proportion of equities and debt, the funds will be invested. So we look at the source of funds from or which fund we are investing, and the investment strategy is based on that. But in all these, since we are not having short-term products, our products are all long-term, we have been and we will continue to be a long-term investor. We look at investing when at the right prices, so that the investments grow in the way it is expected to grow, or the underlying yield assumptions are completely fulfilled. So we will have, and also we are guided by the IRDA regulations when it comes to the controlled fund, and whatever is the regulatory guidelines has to be strictly adhered to, and we ensure that we are fully compliant with the regulations on that aspect as well. So as expected, the proportion that is prescribed in the regulations will be completely adhered to.
In FY26, how much investment was in equity, fresh investment in equity and on debt side, sir?
I exactly do not carry the numbers right now, but only thing is the ratio will be around 20 to 22% in equities if you take the overall portfolio into and remaining going into debt investments. We also have money kept in fixed deposits as well as in liquid mutual funds to meet our asset liability management. We have a planned cash outflow. We have policies maturing every month, and we are expecting a good amount of maturity claims to be paid in the current financial year, particularly because this is the 25th year when we stopped selling a very attractive plan called Jeevan Shri in 2002. So the expected outgo in the current year is higher. So we build up a portfolio which will match the cash inflows to us with the outflows expected for the contractual payments. So we have a close to 10-12% in money market instruments as well as FDs and short-term mutual funds as well. So we balance this portfolio accordingly.
So when you said that you have IRDA guideline as far as investment is concerned, do you think that IRDA need to expand the investment portfolio as far as long-term products are concerned? Are you engaging with the regulator on that aspect, because you are big investors?
See, the regulator has been in constant touch with us, and they have been talking to us to understand the needs. And as the portfolio becomes bigger, the needs of the insurance companies also keep evolving along with the fund size. So we are, as I told you, when the annuity markets are becoming more favored by the policy holders, and more investments flow into annuities, we need to necessarily have long-term investments matching that kind of a long-tail liabilities. So we have been in touch with the regulator as well as the regulators of SEBI as well as RBI, and the requirements of LIC particularly is being duly communicated to them. And regulator has also been taking proactive steps in ensuring that the evolving needs of the market are also fully met by the insurance company. Given the fact that insurance companies generate long-term funds and they go on to meet their long-term financing requirements in terms of infrastructure needs and their nation building, the regulations are also getting aligned along with the requirements. So it's a kind of win-win situation for both of us. We keep working together.
Sir, you have recently operationalized your GIFT City branch. How do you see this expanding your foreign operations going forward? Have you set any target as far as GIFT City branch is concerned?
As of now, we have prepared a business plan, but not set very big targets to start with because of the current situation in the market. But we will be looking at GIFT City as one of the most important parts of our strategy to enhance our business using our presence in GIFT City to cater to the needs of people outside the geographical limits of India. Yes.
With this GIFT City, will you be consolidating your foreign operation? I mean to say, closing some of your foreign subsidiary or businesses?
No, actually we are looking at all the possible scenarios in future. Some of our foreign branches are doing very well, they are expanding, they are doing, we do not intend to do anything to change those markets. Markets where we find the going tough or where we need to make some changes, we will also use GIFT City for providing support to them to whatever extent it is possible to see that we get the best value out of those operations.
But no plan to expand your foreign footprint?
I will not say that. We are looking at operational areas where we can look at expansion also. We also need to build up on the branches which we have already opened. So, immediate our attention is on ensuring that all our subsidiaries and foreign branches contribute, and where we have difficulties due to the market's development there, we are looking at ways and means of ensuring that how we can continue to provide the service to those markets while reducing our expenditure also. So, all those things are our continuous activity.
Any specific as far as new markets are concerned, sir?
We can look at a few markets. Actually, it's too early to comment. Some of the regulators of one or two countries have come and had discussions with us. We are looking at the opportunity available in those markets also, but not in the immediate future. We will have to make a lot of headway on those directions.
Sir, on bank assurance and alternate channels, sir, LIC has been slow compared to, because you started late, so has been slow, and about 5,000 crore businesses coming through that channel. How do you plan to ramp up this, because it's a very cost effective way of acquiring business?
It's a relative term, whether it's the cost effective channel or otherwise depends upon each insurance company. LIC has been a very strong player on the individual agents side. Our strength had been the huge number of individual agents. We have close to 14.7 lakh, 14.8 lakh agents, which is our major strength. And so, we would like to continue to focus and strengthen this channel for contributing much bigger in the days to come. As you said, yes, we started increasing our channel diversification after 2022, and we have made substantial progress in the last 2 years. From less than 3,000 crores, less than 2,000 crores of premium that was being procured through bank assurance and alternate channels, we have now reached 5,000 plus crores in the financial year that just ended. We have strengthened the number of partnerships. We have added banks to our partnership bandwidth, and also we have added some other than banks, corporate agents and alternate channel also to our distribution network in the last year. To name, I can call S Bank, AU of a small finance bank, or RBL, or all these were the new partnerships entered in 2025-26. And that effort of increasing our bandwidth will continue to be there, one. Two, we are also engaging the partners in improving the integration with their technology network. That is another area which is part of the DIVE project that we are working. So that the ease with which these banking partners can enhance their business of marketing life insurance policies of LIC will also be improved. So I expect that this channel will continue to improve its contribution. Last year we saw a 46% growth year on year. I look at a substantial growth in the current year as well. We look at ramping up this in a much bigger way in the next 1 or 2 years to reach a decent percentage of contribution from bancassurance channel as well. To mention, we reached around 7.8% last year of the total first year premium income that we brought in the individual side. In the current year, that percentage is expected to go up a bit more.
So 10,000 crore business you are anticipating from BAC in maybe in next 2 to 3 years.
But nothing wrong in anticipating it, but no, we are not, I'm not looking at a given number straight away, but continue the growth momentum and improve the share from bank assurance is what we are looking at.
Sir, you are a major player as far as a flagship scheme of government penetration is concerned, and you yourself has launched Bima Sakhi Yojana for for the financial inclusion in the insurance segment is concerned. How do you plan to ramp this Bima Sakhi? I think in your last briefing you said 56% of the panchayats you have covered. What is the target as far as 100% coverage is concerned?
As you said, we have been a major player in generating employment as well. We would like, that is where our strength of individual agents come into play. This scheme of Bima Sakhi, which we call the Mahila Career Agent scheme of LIC, was one such step towards women empowerment. It was launched at the hands of our Honorable Prime Minister, and we started focusing on ensuring that we have at least one Bima Sakhi in every Gram Panchayat of the country. And in the last 1 year and 4 months that the scheme has been in force, we have reached 59% of the panchayats right now. There are some panchayats where getting a suitable person for this position has not been very easy, but we are continuously working on this area. We are aiming at having one Bima Sakhi in every panchayat. That is one thing. While we have been working on increasing the number of Bima Sakhis, now we need to work on strengthening this channel, empowering these women, agents who have taken up agency, and handholding them to see that they succeed in getting a good number of customers enrolled to us, because we believe that geographical spread and reaching out to every person in the country is important if we have to contribute towards insurance for all by 2047. A lot of field work has to happen, and Bima Sakhi scheme is one such initiative of ours which will help. We are also looking at enhancing the conventional agents other than Bima Sakhis, as well as I told you, enhancing the alternate channel as well as the bank assurance tie-ups also. We will be looking at enhancing our distribution strength in the days to come. Along with that, we are also strengthening our digital presence. So we also look at making it easy for customers to come onto our own portal or onto the website and make comparisons. But ultimately the sale happens much when the nudge of an individual agent or a distributor happens. That speeds up the completion of the sale process. So it's a coordinated effort, I can say, towards covering the entire country in insurance.
Sir, since it's sort of job generating mechanism, when do you see this Bima Sakhi Yojana becoming self-sustainable? I think as of now, LIC is paying a part of the salary. It is not sustainable completely.
No, it is not salary. We are only providing stipendiary support for the first 3 years of their career. That's all. It is for them to handhold them, to train them, and put them in a career trajectory where they will be able to earn commission of their own. That is a entire working model. So the first 3 years they will need some support. That's what we thought. So we are providing a small monthly stipend to them More than the stipend, the handholding and the training initiatives that we will be taking, that will help them to stand on their own. And naturally, see, agents work in getting insurance customers enrolled to the life insurance company and thereby earn their revenue. So that's the ultimate model of Bima Sakhi, or for that matter any agent. This is not totally new. We have been having career agents in the rural sector. We had urban career agents, we had city career agents, 3 different schemes. This was a focus clearly on strengthening the female segments of the agency force, and that's in line with the career agent schemes that we have been having for quite some time.
Sir, my last question, since you are in your 70th year of inception, and over the years LIC has grown, achieved scale, size, so many targets you have achieved. Now you're 5 years behind your 75th anniversary. So what are the targets that you have set for 75th year for LIC to be in terms of as business parameters as well as other parameters? If you could shed some light on that.
LIC has been a very important contributor in nation building and a very respected institution. Entering the 70th year is both a pride and a responsibility for us. We owe our existence to all the seniors, all the predecessors, all people who have built this organization and brought it to this stage. From 1956 to 2026 has been a journey which was intertwined with the development of the nation, and we look at this organization remaining fully prepared for meeting the needs of the country, for ensuring that the country moves towards Viksit Bharat and developing along with the growth of the country. As the economy grows, LIC grows. LIC grows, helps the economy to grow. So it has been a synergetic kind of a relationship that LIC has been having. One of the biggest institutions not only in the country, in the entire continent. We know our responsibility that we should continue to be improving, continue to be remaining relevant, and ensuring that the welfare of the people and welfare of the nation is put forward and put as the first objective, and behind that put the growth of the organization. We have been growing along with the country, and we will certainly look at growing in the way the country will expect us to grow. We would like to be a major player, as we continue to be, in spite of the number of players entering the market, to be a market leader and with a substantial lead in the market is what we are looking at. 75th year, 100th year, we would look forward to this organization thriving, flourishing and contributing for the nation development. That's what we will aim at.
So, one question I also wanted to clarify. You have big real assets. How do you plan to optimize that? And will you also look at option of having a separate entity to look at monetizing your real asset?
See, for any life insurer, real estate is a part of the investment portfolio. We have a substantial real estate, both inherited and purchased over the period of 70 years that we have been operating. And real estate is used both for our own use, where our offices stand, or also as investment property which earns returns for us. We look at each piece of real estate as an investment, as part of the asset, and we expect each property to contribute towards the returns on the policyholders as well as shareholders' funds. So, in the recent past, we started examining the entire portfolio of real estate and see what is the kind of return, what is the kind of yield that it is bringing in, and how we can optimize or improve it further. So, a complete analysis of the real estate portfolio that we have, and looking at how this also can contribute towards improving the return to the policyholder as well as for the profitability of the organization has been taken up in a much bigger way. All options are open before us. Those real estate which are self-occupied also need to help in improving the image of the organization. So, improving the ambience and improving the atmosphere in the branches and the own buildings is one of the most important areas. Similarly, looking at the properties which are let out, to look at whether they are bringing in the right kind of revenue is also something which we are looking at. As you said, whether we should create a separate entity or whether we should look at creating a division within our own organization. We have a very well established estates department which is currently managing, and we also have an engineering wing which takes care of the maintenance, building, constructions, as well as doing consultancy for others. All these are part of our team, and all of them are contributing for the returns of the organization. All options will be examined and we will take it forward in the days to come.